As we look back over this year, we've seen the market continue to explode. The economy continues to grudgingly recover despite ongoing supply chain and COVID issues, and consumers are as anxious as ever to get back to the new normal, whatever that is. We've had many clients and friends start to ask us questions like, is the market overvalued? And can the market keep going up? And we're getting a lot of questions about the overall economy, like should we be worried about inflation? And is there a pending doomsday for all of our nation's debt? So today, my team is here to help answer some of these questions and hopefully ease some of your anxieties. First, this has been a pretty unusual year when it comes to the market. On average, we see at least a 14% pullback on any given year. And to date, we haven't seen that. In fact, the biggest pullback, I believe, has been just around 5%. So we fully expect to see some sort of temporary correction in the coming months. Now, that doesn't mean that the market or the economy are broken. All that means is that the market and investors, they just need time to reset, and that's okay. With interest rates being so low and demand from consumers at an all-time high, companies are making record profits, and this is driving the market to new highs, and we expect companies to continue doing this in this low interest rate environment. Now, we know this can't last forever, but at least for now, we feel okay about it.
Inflation is and has been a hot topic. We've seen the price of goods across different categories increasing, with things like gas and food, things consumers need the most, far above the average increases we're used to. Some of this inflation is transitory, meaning it's being caused by temporary supply chain issues, the most notable of which is the microprocessor chip, which in today's world are in just about everything that we use. But even with increased inflation, we are expecting to see over the next couple of years, the Federal Reserve has reiterated that it will eventually settle back down to their long-term target of about 2%. How all this plays out remains to be seen.
Earlier this year, one of the biggest threats to the market and the economy was increased taxes coming at the end of this year. Everyone was expecting for taxes to go up, but the question was by how much? Finally, we've gotten some clarity on the tax changes Congress wants to implement, and it's far less severe than what we once thought. For starters, the top tax rate is going to go back up to about 39.6% from 37%, which we kind of expected that. The highest capital gains tax rates proposed to go from 20 to 25% for those in the top marginal tax rate, and all other capital gains tax rates will stay the same. The changes aren't going to shake the foundation of the economy, and these changes aren't even signed into law yet. If there's anything that we've learned this year, it's that Congress is going to have to do a lot of compromise in order to get anything done.
And what about the nation's debt? We're closing in on $30 trillion of debt, and there's no signs of the government slowing down their spending anytime soon. Is there a cause for concern? Absolutely, but not so much as to lose all confidence in our economy. We've been saying it for years that the US is still the prettiest house on an ugly block, if you will. We have one of the healthiest economies across the world, and our government is paying minimal interest on the debt that they've obtained. So yes, they're borrowing a lot, but it's at good low interest rates, at least for now. We continue to kick the can down the road, and the only problem with that is that we can't do that forever. And in my opinion, this is the largest can that we've ever kicked. So something is going to have to give, or there will be a day of reckoning. Now, the good news is our portfolios have shaped well this year, as they've had exposures to some leading sectors like energy and value stocks. Bonds still aren't paying much interest, and we're watching for this to change soon as interest rates change. So, stay the course, keep focusing on your family and friends, collecting memories over things, and let us know how we can help you to retire while you work.